This is the Max Keiser playbook. I've been sharing this with everybody around the world for 10 years now. And a lot of people in the world who got into Bitcoin at $1, $10, $50, $100, except for Peter Schiff, who I told to buy it at $1 or $10, and he refused.
Oh, no, he says you didn't tell him at $1, you told him at $10.
Right, but thousands of people, hundreds of thousands of people around the world did. They're sitting on millions and millions of dollars worth of unrealized profits. And here's the thing, Stacy, I saw you were tweeting about, when are you going to sell it? And you're like, well...
Yeah, here's my opinion here. The smartest, wealthiest people I know got rich and stayed rich with a simple strategy. You create or you buy assets that are high quality, pristine assets. You hold them forever. And when you need cash to live, you finance them. You borrow against them.
Oodles, the upside is virtually infinite because Bitcoin has no top. Why? Because fiat money has no bottom. I'm not going to sell it because I predict it going up to 500,000 or more, and I'm just going to use it as collateral.
Yes.
As borrow against it, and I can use it that way. Why would I ever sell it?
I won't sell any Bitcoin from here on out. There's lots of new platforms and services being offered for people in the Bitcoin space. So you can always just keep stacking and then borrow against your Bitcoin. And I do want to say, you can't say that Max didn't tell you so. That these people are coming, these corporations are coming, these institutions are coming. It was really triggered by Paul Tudor Jones entering the space back in the second quarter of 2020. And now we see Elon Musk and Tesla with $1.5 billion. We don't know how much SpaceX has bought, but presumably they also bought some for their treasury, but they don't have to, file that with the SEC. And, well, I'm going to show you a headline. I just showed it to you while Max was talking, so he didn't see it, though. I'm going to read it to Max. U.S. corporates hold record $2.5 trillion in cash to meet pandemic shock. So that's 2.5 trillion. So if they all do like Elon, how much is that? $250 billion worth of purchases coming. So even if half of them do it, that's 125. If 25% of them do it, it's like 75 billion. So there's a lot more money on corporate balance sheets where, that Tesla money came from.
Right. Look at the big picture here. There's $300 trillion worth of investable assets on planet Earth. That includes stocks, bonds, property, precious metals. How much of that is invested in Bitcoin right now? Less than 1%. So we're looking to do the Elon here, go 10%. That's $30 trillion right there. Bitcoin is still less than $1 trillion. So I figure that's how I come up with 40x from here. That's just a 10% allocation to Bitcoin. And of course, the thing is that we're going to see fiat money basically go the way of all fiat money, which is to 99.9% loss of purchasing power. So that 10% effectively becomes 50, 60, 70%. Again, there is no top to the price of Bitcoin because fiat money is a bottomless pit that loses for the past 300 years 99.9% of its purchasing power.
Like I buy a football team and I hold it forever and I borrow and I have a good banking relationship with a bank and they loan me money at 3% or 2% interest. I buy a city block in New York City. I hold it 100 years. And then if the Fed prints 10% more money or 5% more money, the building goes up 5% in value if it's truly desirable. If you have assets that are scarce, desirable, and unimpaired, they're not impaired. I use that criteria, right? Because like for 100 years, it was New York City real estate, and maybe New York's not the greatest bet this year. But football franchises, city blocks, if I had an unimpaired, Jeff Bezos held Amazon stock. Mark Zuckerberg held Facebook stock. So buy Bitcoin. Am I going to sell it? No. I'm never going to sell it. I'm never going to... Here's two things I don't want. I never want a capital gain tax, and I never want an income tax. Right? Okay.
Of course.
So What's the problem? If I buy an asset and then I'm trading on it and generating yield, I could generate 30% yield, but then I owe 15%, I owe tax on it, right? So if I had $100 million and I trade it, I'm taking a lot of risk. I generate $30 million in yield. I pay $15 million in tax. I have $15 million after tax, and I'm trading it, and I've got all this execution risk.
Right.
If I hold $100 million and Bitcoin goes up, you fill in what you think it'll go up. It's been going up 200%, but if it went up 20%, the number wouldn't. If it was 5%, the answer wouldn't be different. Let's say it goes up by, it doubles a few times. Well, if it goes up 20% a year, every year, if I need money, I set up a relationship with a bank. And there are companies, some of the new emerging crypto exchanges will give you a loan. NYDIG will give you a loan. Genesis will give you a loan. Eventually, you'll see loans coming from lots of banks, and the entire Bitcoin banking sector will develop. So take your $100 million, borrow $10 million, right now it would be 5% interest. It wouldn't be 50 basis points because the sector isn't as competitive as in stocks. If I had $100 million of Apple stock, I could borrow at LIBOR plus 50 basis points, right? I could borrow $10 million and pay less than 1% interest on it. So right. I would just, and if I told you the stock was going to go up 10% a year, you would just hold it forever. Stocks have execution risk. On the other hand, Bitcoin, it doesn't have the property tax risk. It doesn't have the execution risk. There's no new product. It exists to exist. So the strategy is simple. You buy it and you hold it for 100 years.
Hey, Michael, I read a really interesting piece yesterday, just in terms of how we might be looking at this a little bit wrong. Those of us who follow stocks and know about reversions to the mean, that this is different because the mean that you're going to be reverting to is constantly growing. It's happening as all of these new companies, new investors are kind of buying into that. So the mean itself, the line is one that's moving pretty sharply higher. You agree with that theory?
The most important thing to understand about Bitcoin is a bank in cyberspace for people that don't have the ability to run their own hedge fund. It's not a stock. It's an asset class. And so, if I put $1 billion into a bank and then came back a year later and I put another $10 billion in the bank is not overvalued by a factor of 10. The bank is just 10 times bigger. People are using Bitcoin to store their monetary energy for the long term. And so the price is a reflection of the monetary energy in this bank in cyberspace.
Hey, Michael, I just wanted to go back to a question about your holdings of Bitcoin personally and potentially the holdings of members of the board or executives in the management team. And the reason I raise this is I think there's a lot of companies now that are thinking about buying into Bitcoin, and yet there are employees and or board members who are either own Bitcoin already or buying in knowing perhaps that their company is going to buy Bitcoin. How you think about that from a legal perspective, because historically, if one company was going to effectively buy another company, it would actually be considered either illegal insider trading or just a breach of the fiduciary duty, because effectively you'd be taking advantage of corporate information.
Okay, well, the first thing to note is that Bitcoin is property. It's not a security. And that's a very critical idea. Property means you can own a house or you can own land, and your company can also buy land. With regard to public companies, the key is to make sure that you have adequate disclosure of all your holdings that might be viewed as a conflict of interest. And so you can be sure that I went to great lengths to adequately disclose to every member of the board the exact extent of my Bitcoin holdings before we even started to deliberate this. You see, Bitcoin is the most widely held investment asset in the world right now. We have congressmen, we have senators, we have members of government, we have CEOs, we have 100 million individuals out there that have it. You're going to find that lots and lots of people have this property. I think that whenever you're running an institution, be it a charity, an endowment, a government institution, a corporation, the key is to make sure that you're very transparent in your holdings before you enter into deliberation that might impact that company. There's a $500 trillion monetary planet, and the outer layer is currency. Then you've got stocks, bonds, real estate. There's $10 trillion worth of gold in there, $1 trillion in Bitcoin. The Bitcoin is going to flip gold, and it's going to subsume the entire gold market cap. Then it's going to subsume negative yielding sovereign debt and other monetary indexes until it grows to $100 trillion. Once it gets to 10 trillion, its volatility will be dramatically less. And as it marches toward 100 trillion, you're going to see the growth rates fall, the volatility fall, and it's going to be a stabilizing influence in the entire financial system of the 21st century.
Jason, in terms of Bitcoin quarter-over-quarter growth, we've continued to see strong adoption with 3 million customers across Bitcoin throughout the year for Cash App, and in January saw 1 million new to Bitcoin in the month. So increasing awareness that's building through time, and I think you'll see that reflected in the results as well with Bitcoin gross profit, which is how we sort of anchor to the economic impact to our business. Bitcoin gross profit growing meaningfully on a year-over-year basis and also on a quarter-over-quarter basis. As we think about, the opportunity as well from a volumes perspective, Bitcoin in the fourth quarter grew 2.5 times on a year-over-year basis in Cash App, and continues to be a strong front door for us as we see product adoption increasing for customers in their first month on Cash App. So we're excited about the opportunity that we see here. But you're right, it's still early days. Only about 1 in 10 customers on Cash App are using the Bitcoin product, and we see an opportunity to grow that over time.
In addition, today we announced a $170 million purchase of Bitcoin on top of the $50 million we bought in the fourth quarter. Why are we doing this? We believe the internet needs a native currency, and we believe Bitcoin is it. We believe it has the highest probability of empowering more people in the economy in a fair way. We're doing a lot to ensure this from a product, open source development, and open patent perspective, and by us owning Bitcoin, our incentives are aligned with skin in the game.
They become more aware, then they'll make sure their politicians are more aware, and smart capital will find ways to invest. And that's what's happening now.
So you're optimistic that we'll be able to get over this regulatory education hurdle?
Yeah, because
just like the 90s.
Right? There's no choice, because you can work around them because it's decentralized. Look, if there's no USDC, that's not going to stop DeFi. The only thing that's going to screw up DeFi is the liquidity chase and the yield farming, because somebody in the government is going to step up and say it's too good to be true, and let me just tell you why and show all the problems. And like I say to people who yield chase, the risk doesn't leave the system. You just don't know. It's like a game of musical chairs. You just don't know when the music's going to stop. And so you've got to be really careful there in terms of yield farming. But, now if you're sitting home, you're getting a stimulus check, I don't blame people from yield farming, because it's actually smart as long as you can be agile.